If you're talking, we don't hear you, Ryan. Good morning, everybody.
Good morning, everybody. Welcome to the Flow Show. A new week begins, and possibly a slightly quieter one than the last couple of weeks. But we hope there's still some volatility in there anyway. As we look to do battle with the markets once again. Morning, Kay. Good weekend.
Morning, mate. Windy, huh?
Is it?
Autumn is here,
I don't
huh?
know.
Yeah, but for the rest, yeah, nice and quiet.
Well, you must be getting something I'm not because it's nice and calm here at the moment.
At the moment, yes, but yesterday and the day before, over the weekend, it was pretty windy over
Oh
here.
yeah, a little bit blowy. Yeah, it certainly was. Well, anyway, sun's out, and that's what matters. And it should be a good week this week anyway. Keep shining. Right, let's get cracking. Just before we get into the news and stuff, just want to remind you, boys and girls, that we do have our coming soon feature up and running. This is to let you know what's coming at Forex Analytics regarding our change into trading analytics. So if you want to get in front of that, then if you haven't already, then sign up for our page. I'll stick the link in the chat. Give me 1 second. There we go. So get in there, sign up. We are doing various giveaways each month as we lead up to that point. So you can, people have had coaching sessions, TFP sessions. We've got a TFP session, TFP account to be drawn out the hat at the end of this month as well. So more giveaways coming from that. So if you haven't already, get signed up for that. Right, let's get stuck into things. What we're going to look at first. Let me get me little bits ready. China, they kept their LPR rates unchanged. Is it on this calendar? Should be there somewhere. There we go. LPR rates unchanged, 3.53%. There was a little bit of half hope, shall we say, that they might do something in light of the Fed cutting rates. They still may, but we have had the PBOC Governor Pan out anyway, saying that China's monetary policy is a supportive tool right now. We have appropriately accommodative policy stance, and monetary policy will continue to focus on the domestic economy, and will keep the renminbi FX rate basically stable and at an equilibrium level. So they're not ready to let the rate go anywhere in particular thus far. Over in Japan, we've had more noise, shall we say, from all the leadership contenders. Takaichi, in a Asahi poll, is leading the race at 28%. She also says she won't rule out a cut of the sales tax on food as an option. They're all looking at giveaways and easings for the population to try and win those votes. One of the other contenders, Kobayashi, says that he will review and restructure the income tax system and also plans a flat rate income tax rebate for the time being. Motegi says he will uphold the policy of no tax increases. All this posturing is going to ramp up the closer we get to that leadership vote on the 4th of October. RBA Governor Bullock was out overnight, and she expects recent rate cuts are expected to support household and business spending. Says domestic data since August is broadly in line or significantly stronger than expected. Australia is in a good position on inflation, but says there are risks on both sides for inflation. ECB's Muller says rates are mildly supportive and there's no need for a rate cut. France got another little kick in the nuts with DBRS downgrading them to AA, though they've changed the trend to stable. Kay, anything of note out of Japan? We're going to get all this waffle now, aren't we, for the next couple of weeks?
What I found funny is that the two main candidates, where people are trying to make a difference, they both said that they were looking at tax cuts, sales tax cuts in particular this morning. Yeah, big one. Just going to be I don't know. It does seem that we are heading into a Koizumi Takahashi runoff, right? But it's going to be hard pickings between the both of them. Maybe Takahashi, as I've already been saying, is much more Abe version 2, so the floodgates will be open there. Koizumi maybe a tad less, and then it will be up to the LDP to decide whether they want a woman as their chief or go for the younger option with Koizumi. But as we can see, their real programs are not miles away from each other, right?
Yeah, exactly. And the theme has been to see how much money they can drop on the laps of the Japanese population to
Yeah,
get there,
exactly.
to get through the next election, and
No, I
whatever
mean,
else.
yeah. The only real surprise would be, and I'm not sure about Hayashi and Kobayashi, but even if Motegi was behind all of them last year, but he would be the only real surprise because that's a much harder liner. But it doesn't seem that he's appearing anywhere near in the polls to be able to challenge Koizumi or Takahashi.
No, exactly. But you never know. Things can change in politics pretty quickly, as we all know. So you can never say never. This, and it's been a maybe I don't know if it's a surprise or not because this leadership race was an open one. We haven't had any sort of unknowns popping up yet. Is that because no one can be bothered, Kay, or just there's no interest?
They need a minimum of supporters to be entering the race. It's not it's open, but you still need a minimum of support. It's not a completely free race where people like in the UK, Lord Buckethead could could come into an election. But no, I mean, in Japan, yeah, you need a minimum of support, and I think it's 20 of the core members. And so if they already give their support to the five main ones, there's very little numbers left to support anyone else.
Okay, but how does it work? Do they actually need to get the support of 20 before they announce, or can they announce that they're going to run and then look to get that 20 support?
Um, I don't know whether it makes a well, yeah, it makes a difference, but no, they probably have the support before they announce it. It's Japan, man. I mean, they don't run in stuff all guns blazing and then needing to crawl back in their shell. That they would lose face, right? So
Yeah.
they will have the support before announcing.
Yeah. Okay. Thank you very much for that. Right, let's crack on. Get through the rest of the news. Oh, I've lost myself. Where am I? Well, look, yeah, done that. Right, so we had a bit of data out. Well, not a lot of data out, but we had Canadian retail sales out on Friday, and they looked very sucky. This is July data, which, if it followed what everyone else is doing, everyone else seems to have a pretty good summer period in retail sales. Well, not in Canada. Headline sales down 0.8%. Take out autos, it fell 1.2%. Much worse than expected, though. They do expect to pick up in August. There's that flash number that they like to drop on us early. So they think there's going to be a pickup of 1%. Certainly justifies the Bank of Canada's cut anyway. Fed's cash and carry says he supported the rate cut this week. It says the risk of sharp unemployment increase warrants some action. He sees two more cuts this year as appropriate. Says we can always cut rates more quickly if the labour market weakens more than expected, but is also open to raising the rate if economic conditions warrant. Says coming cuts would amount to insurance to keep the labour market steady. We heard from Fed Miran, his first comments as Fed head, particularly after the FOMC. Says he acknowledges being on the low end of the dot plot. No shit, Sherlock. Don't see any material inflation from tariffs. Says there's no discernible US core goods inflation versus elsewhere. Again, talking down inflation. It says border policy changes in recent years have been a big inflation driver. Expects growth to improve in the second half of the year and doesn't think a 50 pip cut would worry markets too much, saying it's a measured pace. Fed's daily jobs market has softened quite a bit over the last year. Part of the jobs market slowing is about the US economic outlook. And so the Fed did a rate cut to try and support the labour market. I don't know how 25 pips is going to support the labour market, but that's why they want to cut a couple more times as well. So we had the Trump and Xi phone call, which just ended in both of them saying that they held constructive talks. A bit of waffling over TikTok. They might meet in South Korea. Trump may go to China, Xi may go to the US. Other than that, it was a complete dead duck. Nothing really of note from that elsewhere. And just a little bit of funny news, and we've been talking about this with our mate Five Magics in the chat room, our resident Italian, because we've had all this setting up European Defence Fund that's going to be used to restock defences and everything. Well, Italy has somehow worked out that they can use the terms within that defence fund to build a bridge from Italy to Sicily, the island of Sicily. How that is in defence, I have no idea, but according to them, they can legally use that money to do so. Except they've now received a letter from the EU, not querying the finances, not querying their reason of using the defence fund to build a bridge. They want to know the environmental issues of building that bridge. That's Europe in a nutshell, folks. That's it from the news. Anything else, Kay, over the weekend you pulled out?
Nothing immediately market moving. We don't see it in stuff like euro sterling, for instance, but there seem to be quite a few promises from investors to pour into UK tech for some reason. We've heard from the Americans after Trump's visit, and now there's a Canadian fund who wants to invest. How much is it? Like 2.5 billion Canadian dollars or so into the UK. Oh, 2.5 billion sterling. Oh no, that's not in tech. That's in UK property. Apparently, the Canadians are going to save the UK property. They want to pour in over the next, and I'm just trying to read through it if I see any projected timeline to doing this. No, not immediately, but they want to invest a bit in the UK, which is not too bad. Too bad news for Mr. Starmer and his lot.
Yeah, not too bad at all. Let's see how many decades are going to be spending that over.
Yeah, and maybe lastly, there is a bit of how shall I say, a bit of nervousness surrounding. We know that Nippon Steel bought U.S. Steel, right? But then this whole plan that Trump's administration will have the free rein to direct any of Japanese investments. Now they want to get involved in the Nippon Steel investment as well, and now Nippon Steel is feeling, let's say, a bit cold to continue to pour money in there because they want to obviously have a say where that money goes. And so trade deal, yes, but when it comes to deploying the cash, may not be straight away between Japan, actually from Japan into the US, I mean.
Yeah, we'll see that. And also just I read something about South Korea as well, that they've got problems with this 350 billion investment into the US and whatever that's going to go ahead, because the way the US wants it, they want it in cash, all in one hit, which South Korea can't afford, which will put them into some serious problems if they do follow that. So another one struggling to get deal terms done and whatever. But that's something we'll look at if it becomes something we need to look at. Right, just quickly before I move on to what's coming up this week. Ayez, you're short gold and it continues to surge. Should I hope for a dip or cut my positions? What was your plan from the start, sir? You must have had a plan from the start. What was it? If you didn't have a plan from the start, then your hope for a dip is nothing more than that. We don't do hope in trading. You should have had a plan right from the get-go. So let me know what was your plan at the start, and then we'll look at gold in a moment. Right, looking at what's coming up, it is a fairly decent week for the data. It's going to be important because this is really the first lot of data we get post all the central banks. So we get to see were they right, were they wrong in all the messages they've given us. PMIs kick off tomorrow. Global PMIs kick off tomorrow. So we get all the flash numbers coming from around the world. We get to see if there's any further improvements or not. We get new home sales from the US and the IFO survey from Germany tomorrow. So further housing data, which hasn't been too bad. We've had a couple of little wobbles so far. We'll see if new home sells anything to that. And then the IFO will give us another look at how Germany's faring. On Thursday, it's S&B Day. That's probably going to be the biggest event. But we also get US durable goods and GDP. Now, this GDP, I think, should be the final numbers for Q2. We're just about to close Q3. So not wholly important unless there is a big, massive variation in those numbers there. Just give it a cursory glance. Existing home sales and some inventory data later on. On Friday, not too much out at all. We do get PCE, which is in that personal and income and outlays number. So keep an eye on that one, the PC numbers, though Powell's already tipped the nod at that. 2.7% he expects for PCE, which I think is up a pip, and an unchanged core at 2.9%. So he's back to the guessing game. Then we get the Michigan numbers lastly on Friday. We also got Ritzbank. Sorry?
Powell was 0.1 off last time he announced PCE. Yeah,
I think he's what, 5 out of 6, 4 out of 6, something like that.
And we also have Banxico on Thursday, Ryan, which is interesting since the stuff has been on the move. It makes it
good. I mean they should, if the Fed's cutting, they should follow up with a cut as well, but maybe they don't. We shall see. I don't know what the Banxico have been up to recently. Was there? I think there was a. There
was a cut last time.
That's right.
There was a cut last time, but they went on to the global data watching side of things. So they do usually follow the Fed, but this time they anticipated the Fed. So I don't know whether they're really going to cut or not.
Yeah. Was there a dissenter last time? I don't think it was a. Yeah, there was a dissenter last time. So that may be the thing to watch again this time around. But, yeah. And as I say, Ritzbank as well. K, the S&B could be a bit interesting this week with all the talk about negative rates.
Yeah.
Things haven't got great for them. They've still got very, very low inflation. I don't think they go at this one, but could they tee up the potential for December if things don't improve?
They could. They could. Yeah, I doubt they'd go now as well, because it's really it's a big decision for any central bank at any time, but it's a real big decision to go really negative when nobody else is really. Yeah, the Fed cut 25, ECB has been cutting, Bank of Canada has been cutting, but it's a real big decision to go negative. It will really send a strong message to say, like, okay, Swiss franc is now really strong enough, guys. Don't stop buying it. But we also know that every quarter so far, the Swiss franc has been heavily bought. So maybe there's a bit of a decent opportunity coming. Not this week, but next week, right? Is the end of the quarter. Maybe there's a decent opportunity coming if they would decide to go resolutely dovish. He won't be hawkish later, and that's something that we completely rule out. But yeah, how dovish will they be is the real question.
Yeah, absolutely. We'll have to see what those guys do. Anyway, yes, just going back to your gold. Well, let's have a quick look at gold because, unless there's anything else you've got highlighted for this week, Kay?
No, 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 mate. I mean, yeah, I mean, there's a heap of Fed speakers, right?
Yeah, yeah, no
But
doubt.
I mean, usually after two, we know exactly what they're all going to say. So, what the ones that may be interesting though is Waller and Bowman. Why they did not descend for a 50? Because they were so dovish before.
Yeah, yeah, good point. So we'll see what those clowns have to say. Right, Ayes, your gold. Okay, so you were planning for dollar to strengthen when the US market opens. Okay, so that was not opening for another hour or so. And you should have exited at 37.10. Was that your stop loss? And if that was your stop loss, why didn't you stick to it if the trade was going wrong? It's no good being offside, hoping for a market to come back to you. Bad discipline. Yeah, you've got to work on that habit, mate.
Oh,
Either you're wrong or you're right. That's it. And if you're wrong, how much you're going to lose at the start? And if you're looking too much at the dollar to trade gold, trade the dollar. It's like what I say about people who look at oil for trading the loonie. Yes, there's correlations. Yes, they can be stronger at times and weak at other times. But if you're focusing so much on one asset to trade another asset, trade the first asset. Okay. Why put all the work into worrying about what the dollar's doing
mm,
to then get caught out in gold? You either trade gold on its own rights or you trade the dollar on its own rights if you're looking at it that way. And just use the correlation to see which way the wind's blowing at any one time.
can't,
So yeah, that's my advice to you on that one.
can't, can't.
Right, I'm going to have a look at a couple before I hand
I
it
just
over
want
to.
to say,
Yeah, go on, mate.
I just want to say there, I ask, don't trade metals on the back of an opinion on dollars. They are different markets, man. I mean, this, as I said, for many a long time. I mean, gold is a hedge against everything that can go wrong, and also been trading a bit on the back of yields, etc. But I mean, if you have an idea on the dollar, trade a currency or trade something else, but really don't trade the metals on the back of the dollar. They are in their own world. And for gold, silver, well, all the metals have been flying, but gold, silver especially, they have like very good reasons why they are higher. And really, I'm never trading any of those metals on the back of an opinion in the dollar unless we are in a situation where everything is just going smoothly. We don't have any geopolitical stress. We don't have any trade stress. We don't have any other things playing or hedges that been used and to then trade. Then you can trade it on the back of an opinion in the dollar. But really, they are standalone instruments where the currency actually doesn't really matter much.
Yeah, and as for where you should put your stop loss now, mate, that's down to you. I can't give you that advice. I mean, your stop loss at 37.10 was fairly decent, just above that prior spike high. We moved above it, we came back down, give or take a couple of cents. We tested it and held it, so that was your potential get out. What you do from now is up to you, my friend. But yeah, as I said last week, trading any of these lines, you don't need to be offside by a huge amount if you want to fight these trends. This is all short-term stuff. Okay, and we had the levels developing. So yeah, the stop loss for you, mate, is up to you. But yeah, you knew where you were wrong with that 37.10. So just got to work on that discipline as well. Right, just a couple from me. Dollar CAD. This one I picked up a little bit on Friday and picked up a bit more on a dip down to those 70s. I'm looking just for a bit of this continuation of this bounce. The fact we couldn't get back down to this area Friday or decided we were going to start stabilising. It needs to get another shove back above. Let's go a bit wider. Another shove back above this 38, 10, 20 area. And then we might go on to think about testing out this 38, 60, 70 area. At the moment, we're just in a neutral price action at the moment. We're finding support down here. we're finding plenty of resistance up here. So if we go up to this area, does it hold? Does it break? We'll have to wait and see. But I think any quick return down here from around this area now might spell a bit of danger for that level, and then we might be having a little break lower. But I'm long in this one and looking to stick it out. Euro sterling is one that, again, a decision needs to be made at this 87.20 level. We keep banging our head, we keep failing. We failed, we failed, we failed. Even when we've gone above it, haven't stayed there for long. This is going to be a key level if we start to get above it, because it does mean we should push on at least towards these prior highs up here, if not more. The dips on this level, though, now are very, very shallow. We're holding well above, well, I say well above, 10 pips above 87, 86.90, which has, again, been another sticky area. So while that's happening, then the chances are we are going to push above that 87.20 and see if we make inroads into that one. Kate, I'm going to punch it over to you nice and early, mate.
Okay. There was a request for Sterling Aussie, and I'll have a quick look at it. Just DJing a bit on request here. Where's the chat? Let me pull that up. Sterling Aussie, and that was who is it? Fred? Who is asking? Sterling Aussie, Fred. Look, I mean, this is a bit of a longer term view. We've come down earlier in September to a pretty interesting zone here. You see where it is, 203, 202.90. High here, low there, near low there, near low here again, just stopping before. So this is a major line here, just around 203, 202.90, okay? So if it would come down there and break, then there's something wrong. And I would say in current context, it's rather going to be driven by sterling weakness than Aussie strength, I would say. Because we are edging slowly closer in sterling to the autumn budget. We have also seen those borrowing being very high. So then, if you look at the top side of it, we're also not too far from an interesting zone here, 204.70 and just around 205. 205 is the first resistance here on the way up. We spiked a bit above, but came back under here. So that's 205 again, and then 205 and a half, I think it's around here. Yeah, so it's nice and easy, really. Every 50 pips on top, there is going to be something happening there. I don't really have a strong view on sterling Aussie as such, but I am a little more positive in mind on the Aussie compared to the sterling. I'm like Ryan. I'm a bit longer sterling as well, and I've actually, and there I'm coming to Ali. I've actually bought it, the Aussie this morning. I didn't buy much, but I bought it. You see this little spike above 65.80, then earlier 8th of September we came down and bounced, and then especially on the 10th we came back down there, and that was really the springboard to go up and have a look at the highs. So I've actually bought it around this level here, but I'm not risking much. I'm really looking at this 65 and a half, 65.60 zone. That's going to be the make or break for the Aussie dollar right now. But if we start to get back above, and I would say not too far from here, look, those little spikes above, just at 66 the figure, 65.95 figure, we are right on there. I think if it goes through 66 the figure, we can move higher a little bit. Of course, never say never. It doesn't seem like the start of the week is going to create huge waves, although we have already seen euro dollar tick up nearly 50 points now from the low, which is interesting. I have the impression, and Ryan also said start of the week a bit slower, then we get into the PMIs. It's the market is in a bit of reflection mode right now, but I do have this kind of, I don't know, feeling that the market may not completely have given up on a lower dollar yet, or at least viewing all of this as potentially corrective activity, and then in which case as I said, we can go, depending on those PMIs, we can go, or those Fed speakers can go and test it around 65 and a half. But I'm compared to the Kiwi, for instance, the Aussie is still one that I much rather uh, be long of than the Kiwi. Kiwi is looking a lot weaker. Um, what else? Yeah, we have to look at. Ryan already briefly looked at the metals, but we have to look at it. This is really, it's they really are pushing higher. And silver again in just 2 sessions went from support into the next extension level around 43 three quarters, which we have hit and which we are not too far off right here and now. The main one to look at, it's a problem of demand. And now I've read again about India as well. Um, really in big demand, but really being an industrial metal, it's even used in the reconstruction of drones, and there is simply not enough demand, it seems, in silver, and that's why it's really flying. Yeah, are you? No. The next big level is going to be here, 45.40. That's the 88.6 of the whole move 2011, 2020. And then technically, and we are also here around the prior high around 44. But if you see a move like that, technically it's should have actually stopped 41.60, but it just can't because there is so much natural demand behind that. And I'm probably going to let, if we get a move here, I'm going to let my long term the rest of my long term go and then reassess. But it is still an extremely strong move, and that is making it so hard to try and find tops. And Ayaz was looking at gold, and but again in silver as well. People were thinking like, okay, now we are going to start to correct. But if you trade stuff like those metals, etc., it's so hard to find really where the market is going to stop because you're talking about stuff that is actually dragged up by real physical demand, right? And the same happened in gold. Um, and the interesting thing as well, and there Ryan already showed this, but it's the demand is by far outweighing the supply of stuff. And when the real market starts to have demand, I mean, who are we to stand in front of it? Yes, you could have technically maybe sold it again around 36.90, but as soon as you go above that high here, because actually your first stop was relatively well placed. Um, it's wrong. The thing is as well, you have to look at, and I'm after that, I'll probably maybe just look at the cable for Brian, and then we leave it there. The thing is, in you have to look at what happens in which session, and I've been talking about that. Okay, the last big rally in gold here has also been fueled by what happened in the US session. Before, we were always looking at, okay, the Asians are buying, it's probably not going to stop, but then they stop a little bit. But this has also been fueled by what's happening in US sessions. And if you combine the US and the Asian session and they both buy, I don't see how we, and I don't see why a line or a level would stop it because they're just continuously buying. Okay, once the demand dries out, we may see a correction or a reversal, but when we don't really know. We don't really know. Okay, I've got an extension here from this one at 37.34 that I'm keeping an eye on, but that is just for information, extensions are what they are. They haven't been playing any role. If you look at it, the 3600, it just flew through, and we never even looked back, never even came really close to it anymore. So for the time being, myself, I'm for sure not going to stand in front of this move. Actually, I'm trying to play in the move. Okay, it may be interesting what happened in cable here, okay? This is a bit of a traffic zone that we saw before, and we know that about this bigger zone here, right? But it stopped in this 3560 zone, 134, 3560 zone. It stopped in the cable, which may be an interesting one to look at as the week progresses, as we are going to get those US data PMIs as well going forward, okay? Because the market is relatively um, bearish on the sterling because you see the euro sterling is bid, etc., with everything that's going in the UK. But if the cable could find a bid here, it may be that we are going to go back into levels which are trading a bit higher. And then I would especially look at what's going to happen around 135.40, 45. It goes back above 135.40, 45, then I think this will also only have been a correction and we could continue to move higher. Okay. And with that, Ryan, back over to you, mate.
Thank you very much, mate.
Just around that 117.80, yeah, you were talking about in euro dollar as well.
Yeah, bang on it. Bang on it. Let's have a look at that in a moment.
Yeah.
Anyway, we can have a look. Just before we go, I just want to make you aware. I know someone mentioned it, Stephen, earlier. We do have a sale on in our trader funding program. You can see there all plans 30% off. Use that code full30. And you can get 50% off 5, 10, and 25k accounts. New customers use the code new 50. That's running, I think, until the end of the month, 29th. So jump onto that if you want to get a deal on that. Aside from that, we're going to call it a day for today. Nice short one today, get you started for the week. Wish you all a great week ahead, and we'll see you nice and early tomorrow. Have a great day, everybody.